morning, good afternoon, good evening, Alpha Traders. Here we are once again. You watched the last 2 days of the streams. I was trying to tell everybody what the higher time frames were looking like, what our alpha trading indicators were telling us, and it was telling us price was going to go down, right? Pretty much dropped about 5K today. We're going to have continuation. Yeah, we are. So where are we targeting? Where are the alpha traders targeting? Well, we're going to start on the weekly probability chart with our projections and our current candle levels. When we're talking about confluences, these are the type of confluences you're looking for. When I've got this Laplace projection from the 41K low, we just broke the mean. We just broke the mean, right? That's the white dotted line right there. We are below it now. We just closed on the weekly. We just closed this daily candle below the mean. Where's the next target? There's a ton of confluence. The second standard deviation normal distribution, the 95.4% Laplace distribution, and the 68.3% Laplace distribution range of this projection below the mean here. This area right in here, this is the 68.3 Laplace distribution range. In my opinion, I don't think we're going to break it. We could we? Sure. 100%. I want to see how it reacts down here. So where is all this stacked? All three of those ranges, they are stacked right on top of each other within a few $100s. You've got the second standard deviation normal distribution at about 40,400. You've got the 95.4 Laplace distribution at 40,700. And that is 68.3 is right about at the Laplace, right? It's right in between them. It's probably at about 40.6. So all three of those levels are stacked right on top of each other. I'm looking for a nice bounce there. But we got to go back. We got to remember. Do we remember this candle right here? You see that little pink dot right there? That was the 95.4 Laplace distribution range at about 47.7. I was telling everybody, target that area. Not financial advice, but target that area. If you are a trader, what did Bitcoin do? It went through. Where did it go to? It went literally almost to the third standard deviation normal distribution. And if I'm correct on futures, it did go right to the third standard deviation. Spot didn't get down that far, right? Because of course you're going to get some cascading liquidations on the perpetual futures, and that's going to create a little more down action. Got to get away from that speed 50. So that being said, when I was targeting that area, we didn't have the 68.3 on this projection there. All these are stacked right on top of each other. I'm going to say it again. I'm looking for a nice bounce. Could this be the bottom? Be careful. Like I said, I want to see how it reacts here on the weekly. Now, in my opinion, this week, that's going to be the bottom just because of all this confluence. And when we're talking about the distribution, which is all that matters to us for targets, when you start to understand volatility, probability, and statistics training, you will realize real fast how powerful these levels are and how you can trade however you want. But if you're out there trading fib levels and exponential moving averages and things of that nature, good luck, man. Good luck. These hit to the dollar. When we're talking about an asset that's like above 40K, these things hit to the dollar most of the time, especially these projections. Look how this dump hit the 99.7, wicked right to the 99.7, pulled back up, found support on the 95.4, bounced off of it, started a new projection here at the 41K low, rejected 2 weeks in a row to the dollar off the 95.4 to the top side. Now that we have broke the mean, it's literally a no-brainer that Bitcoin is getting ready to come down and test this level. I talked about this in previous streams, and I've also been talking about for literally a month and a half that when we drop down into here, now the Bitcoin is literally stuck in the 68.3% range. It will not surprise me at all if we come down, test this 68.3 and bounce. Maybe we reject off the mean. Maybe we start closing daily candles back above it and we go to the top side of the 63. This is what I'm saying. Nothing is going to matter until we start closing daily candles below about 40, 40.5 and to the top side around 54, 55,000. That's when shit's going to get real interesting. And I'm telling you right now, if we break down below this high confluent area this week, this thing could flush out majorly. And I'm going to tell you about a little bit of the news that came out. I don't trade the news, but this is some news that does impact the markets. You can see how red the traditional markets are today. Maybe a lot of people don't know what's going on. And there are also some shit hit the fan in Kazakhstan, where 18% of the Bitcoin hash rate is now. Did you even know that? I had no clue. Bunch of Chinese miners fled there. The electricity's super cheap. They had like 6%. It spiked to 18 in like a very short amount of time. But anyway, let me shift this to the monthly. So if we break below, we start closing below, like let's even be safe and say 40K. We close some daily candles below 40K, go up here on the monthly. Then I'm going to be looking at the first standard deviation on the monthly. That's a little close. And here's another reason why we could get a wick down to like 39.5. That's the 1SD. We are literally, where did this price action just go to yesterday? Within a couple $100, it tested the 68.3 Laplace distribution on the monthly to the downside. The first standard deviation normal distribution, 39.5. But I'm saying if we start closing dailies below this monthly here and that weekly below 40K, we're probably going to see a second standard deviation move. The second standard deviation normal distribution is at 32K. The 95.4 Laplace on the monthly is 30,323. Now, on a wick, that wick's going to be below this last low over here, this local low on the monthly chart. In my opinion, if this moves that hard, we are going to wick up so fucking fast and probably close the end of this month on a higher low. This monthly chart for Bitcoin is still very bullish in my opinion. But one thing that happened today, right? In the Fed meeting minutes, it was kind of leaked that the rate hikes are coming a lot faster. They're right around the corner. We're going to see the interest rates start to rise. Not good. That's why the traditional market's dumped. And then we got the double whammy for Bitcoin. Some shit's hitting the fan in Kazakhstan, and that's where 18% of the Bitcoin hash rate is. So, that's news you can kind of, I don't trade the news, but that's not good. It's not good at all, especially the rate hike. That is not going to be good. Why? Well, Bitcoin or cryptocurrency's overall market cap is 2 trillion, man. It's not big at all. Right? Things like this are still going to affect Bitcoin because a lot of people are, well, YouTube Jimmy said that Bitcoin's sound money. Why the hell is it dumping? You think people would be like escaping and going into Bitcoin? Not when you got a $2 trillion market cap, it's too small. It's going to be affected by these things. But I'm telling you what, right now, when that will change is when Bitcoin overtakes gold's market cap, the 10 to 12 trillion. I don't even know exactly what it is. It's in the future. It's going to happen. But Bitcoin's going to have to find a low here on the monthly. And when it does, look, this monthly chart's bullish as hell. If you understand the volatility creates these candles, what is the volatility telling you right here? That's very bullish, right? And when it comes to patterns, I'm not going to speak of these dirty these dirty things, but you can see what I'm talking about, right? Volatility is creating this formation right here, and it's very bullish. All right, let's get back. Let's see here. So yeah, we break that 40K range. I'm looking for 30 to 32K. But in my heart of hearts, I I truly don't think Bitcoin's going to break out of this 68.3 range. A move down to 40K. Here's what possibly could happen. We start moving towards 40K and we're close. It's going to start scaring the shit out of people. There's a lot of over leveraged people. If we start to get some long liquidations and we start getting a cascading event, we could get a wick to 32 easy. But I firmly believe if that happens, and I'll go back to the monthly, that sucker is going to wick right back up and we're going to close at a higher low and continue back to the top side. That's my prediction. That is Bilbo's prediction. There's a lot of people out there talking. Most people aren't looking at these levels. Most people, do you know how few people are even using a Laplace distribution projection in this market besides the high frequency trading firm algos, hedge funds, right? Guys that are trading options at a real high level that have been using the distribution for decades. Laplace just recently, guys, there's a lot of those people, they're still using the normal distribution. This is catching on. Laplace distribution and entropy, the big firms are catching on to it. They are definitely starting to use it. Why? Because what's the biggest thing we want to know in any market? Is it random or is it trending? That's all that matters. That's all that matters. And when you get a trending move and you're having volatility expansion, like we are on the 4 hour big time, the 12 hours expanding big time, and the 4 hour trend on the entropy has rolled up into the 12 hour. I'll show you here in a second. It's starting to trend. If that works up into the daily, 30, 32, 30 is a no brainer. Probably going to happen on the wick. I don't think Bitcoin's going to close down there. If it does, and we break this monthly structure with a lower low, either it is going to be a bear trap of all time, and they're going to really scare the shit out of people, and then you're going to see a move probably in maybe a week back up to 60 or something ridiculous from that area. It could get real ugly. I'm talking get real ugly. We're talking, hey man, 20K never got revisited, right? 20K never got revisited. Let's go over here, show you what I'm talking about on the regular charts. Let's go up on the 4 hour. Okay, here's the 4 hour. Now, first off, I was gone earlier today. I was talking to MJ. I was like, what a trade of all trades. You kidding me right now? Look, when you get an outlier on the variance on the 4 hour chart, if it's negatively correlated or positively correlated, put a fucking blindfold on and hit the red or the green button. Look at the distribution levels and take your profit. So if I were to see us start having an outlier on the 4 hour, I'm immediately over on my VRE. When did that outlier start? It started right up. Hold on real quick. Let me see here. Whoops. Let's see which 4 hour candle. Okay. Right about up here. When we rejected off this first standard deviation, that's when it started having an outlier. Now, this would have scared you. You should have taken, I would have probably taken profit here when I saw this bounce out of this. But then look what happened. And when you're having an outlier on the 4 hour, that's telling you literally you're having a fat tail event. So I'm looking at the daily levels and I'm probably taking profit down around the Laplace 95.4 or the second standard deviation. They both got hit, right? Here was the one SD. You could have taken your profit there. But when you're seeing you're having a fat tail event's going to be a 2 SD or move or more. Did it happen? It sure did. Bitcoin wicked down, but look where it pulled up, right? Look where it pulled up to. It pulled up inside the second standard deviation on the daily. There was a 95.4% chance Bitcoin would close up inside that level. There was literally only a 4.6% chance Bitcoin would close below it. Let me back this up and I'll show you something as well. Got this 15-minute projection here. Oh, right, 1920. Let's see. And so on this final move here, Bitcoin drops outside of the 99.7% Laplace distribution range. So not only did it drop outside the second standard deviation on the daily, it got outside this final dump, 99.7 Laplace. There was a 0.03% chance this price action was going to stay out here. It popped right out, closed up inside of it, just like we closed up inside the 95.4 Laplace. So now you got to ask yourself, where are these new levels? And when I'm talking about all that confluence, I'm kind of middling it right at about 40.5. What's down here at 40.5? Right? Close enough. right at about the second standard deviation on today's daily. And the 95.4 Laplace is right at 41. So are we gonna what's gonna happen? Just gotta find out. Are we gonna wick just like we did today? Are we gonna break the 95.4 Laplace and then maybe on a wick get below the second standard deviation again and pop out? This would make some sense. 40K is the daily. Is that the S3? No, S2. Okay. So this is the daily S2 down here. I would imagine, considering what I'm seeing on that weekly chart with those distribution levels, that 40.6, maybe on a wick, well, maybe a wick down to 40.5, 40.3, maybe even down to this S2. This is a volatility range support level on price action. That's a tick under. That's actually the monthly 1SD. Oh, influence 39.7. Hold on here. 39,436. 39,436. The third standard deviation on this daily candle is right on top of the first standard deviation on the monthly within $1. There's some confluence right there. So if we get below this 95.4 Laplace on the daily, the second standard deviation, maybe we get a wick down to this 3SD, bounce off that monthly first standard deviation, bounce back up. Because remember, we're going to be outside. We're going to be outside of this 68.3. And this is a high time frame. There's a 68.3% chance Bitcoin is going to stay in this area. So that's what, like, when you're an alpha trader, it's all about probabilities. It's all about probabilities. What is the probability of this price action staying here, getting below here? This is what you got to be asking yourself, and you got to be going through these higher time frames and finding confluence. You got to be looking on the VRE, seeing where the new daily, right? Where are the new daily volatility support levels at? And as a matter of fact, where is the new? Yeah, I knew this was going to happen. So the new daily volatility range is right above the 68.3. Boy, oh boy, look how much this 68.3 range is starting to really tighten up. What's that tell you? We're going to get some volatility, man. There's because we got some mad volatility still coming in. I'm looking at that 40.5 area. This isn't financial advice. This is what these charts are telling me. This is what our charts are telling me. Okay. And I always say that. Right. I'm not fucking like pulling out some crystal ball and rubbing it, right? I'm looking at our charts. It's telling me what's going on with the market. It's telling me about volatility. Go over here. So here's the 4 hour. Look, we started having an outlier. It turned positively correlated. This thing's getting ready to flush. When this thing tests the bottom side of this daily range, be prepared. Be prepared. We could be getting ready. I talked about this on the stream the other day. When you see the z-score log returns come up and tap like a 99% confidence interval, be prepared. We're going to go down and test the other one. We tested, we exceeded the 99 here. What's it do? It goes right back up to the top, right on this 4 hour. Now, we're talking about that low was right here. And here's what popped this last move up, because these are all lower lows. Look at the z-score, higher lows. And then, boom, z-score goes up, has an outlier. That would have been a good trade to the top side. Let's see here. So I firmly believe on this 4 hour, we're going to get down into this 99% confidence interval, but be careful. Look, the last time it happened was this low. And then we got it. We went sideways, had another leg down, had a little pop, and then had that big 4 hour candle down again, just created more bull div. There is no, I mean, that's a long way to go back on the 4 hour for some bull divergence right on there. I'm looking more short term. There is no bull div hidden or otherwise building on anything. This move is not done, not even close. And when you see the 4 hour entropy trending to the downside, right? Big time in trend, right? The red top, the EPP is telling you that correlation is building to the downside. You go up onto the 12-hour. Uh-oh. That trend is leaking up into the 12-hour. What's the daily look like? Daily starting to trend to the downside. And now look at the daily Shannon entropy percentile. It's starting to expand, heading into negative correlation. What I tell you before the stream, MJ, that I did not want to see on the daily. I'm seeing it. But here's what you got to look at too, though. There's some bull div building on the returns oscillator on the daily, right? We could still we either this we could have a little relief here. The biggest problem is that we opened up the day below the daily range, and already on the lower time frames that we're creating hidden bear every time this thing's trying to pop up. This whole see right here. Yeah, 15-minute. Dun dun dun. Let's see here. Dun, dun. Yeah, you can see it. I mean, it's building on the Z-score. Not so much on the returns. I'm kind of surprised. What's a 45-minute do? Yeah, at 45. There we go. So you can see you've got a higher high on the returns oscillator, 3 points of it, right? Hidden bear divergence. And right now on the 45, Shannon entropy percentile starting to expand, heading negative correlation. Bitcoin is Bitcoin's in trouble. That could be the title of our video. Bitcoin is in trouble. As Bilbo eats turkey. 90-minute building hidden bear. And here's the thing on the 90-minute. Shannon entropy's kind of expanded, starting to head in a positive correlation. So on the 45-minute, you could see an expansion on the Shannon entropy negatively correlated and a contraction on the 90-minute heading into positive correlation, telling both of them telling you we're going down. I love you. Everybody knows I love the 90-minute. I'm going to be watching on these lower time frames to see if the entropy heads back down in the trend. Here's the thing, and it's always going to happen. When you shoot outside these standard error bands, you're usually going to pull up back inside pretty damn quick. But you can see they're dropping pretty damn fast. So even if this starts to go back into randomness a little bit, there's room for it to drop back into trend again. You see on the 45. Like right here. Look at this band down here. Here's on the 45. So that's what you do. You just drop down through time frames and you go, okay, when are we going to trend again? We're already random again on the 15-minute. Look how far down these standard error bands are. These things are going, hey, I'm down here. Come trend. Let's go wreck some more longs. That's exactly what that's telling me. Is that the 12-hour that fully expanded? Yep. It did on the previous 12-hour volatility candle on the 636 length expanded with that 12-hour candle all the way to 100% significant negative correlation. So what's going to happen here? Are we going to start contracting and head up into positive correlation? Are we going to expand back up to 100% and stay significantly negatively correlated? Right? You can see the historical volatility Z-score had an outlier, negatively correlated. Everything on the charts here, 12-hour, 4-hour, everything down. This was an easy move, an easy trade for alpha traders, man. if you were paying attention. All right, let's see here. Now, since we did get that new 2-day candle yesterday, right? Yeah, it closes tomorrow. So remember yesterday, I was like, okay, we're closing this 2-day candle below the 144 length variance log MA. It bounced price action last time back up to where we got back up to like 52. Rejected, right? Came back down. We closed right down here below at one time. Then we had a little bit of a relief, but it got up above it, but closed right at it. Next 2-day candle closed below. And I even told everybody yesterday, I was like, this is not good. You're gonna see continuation to the downside, right? Like I said, this is not crystal ball shit. This is understanding volatility, probability, and statistics. The 3-day closes tomorrow as well. So we got a 2-day and a 3-day closing tomorrow. And I was talking about yesterday, I was talking about the 3-day, that previous 3-day candle barely closed above. And yesterday, if you remember, this 3-day candle was hanging on by a thread above this 99 length variance log MA. People say, Bilbo, why do you use these strange numbers? 144, 99, 54, 33, right? A lot of people use the 9. Well, the 9 is the basis of everything for me. The 369 philosophy, those numbers are very powerful. When I use that philosophy in my trading, it runs straight up the line, right? 144 length. What's that total up to? Totals up to a 9. 4 plus 4 is 8. 8 plus 1 is 9. I always round my numbers into a whole. And if they add up to a 3, 6, or a 9, you are on it. It's a good number to use. 54, it's a 9, right? 33, it's a 6. But 33 in itself is a master number. Do I bring numerology into my trading? Yeah. And so did Tesla into his inventions. And he has been a big influence on my life. And that's where I got this from. And it transfers right over to trading, more powerful than anybody could ever possibly imagine. So let's see here. I just thought I'd throw that in there real quick. Ran about numbers a little bit. So 3-day, we're below it, and it's not good. 5-day. The 5-day, we just got a new 5-day candle today, right? And I even said, I was like, look, yesterday, the 5-day was barely hanging on to the 54. Just like the 3-day, we just closed the 5-day candle below that 54. We got a new 5-day candle. Look where the 99 length is. $32,000. What's at $32,000? What did I just talk about being at 32K? The second standard deviation, normal distribution on the monthly is at $32,061. When you see something like this, when you see something like this on a 5-day, look how the 54 kicked this price action back up, wicked right to it, right? Wicked right to it, kicked it back up. Ladies and gentlemen, we just ugly, 2-day ugly, 3-day ugly, 5-day even more ugly. The hell's happening on let's look at the 7-day first, and then we'll go to the weekly. Well, why, Bilbo? 7-day and week's the same thing. No, it's not. Here's a little tip for you. Even just like yesterday, Bitcoin on this 7-day was barely hanging on the 33 length variance log MA. That's very powerful because it is a master number. Look on this dump right down here, right? The 29K low kicked price action back up to the upside for a new all-time high at 70K, right? It got up above the 9 length, found support on the 9. We had a couple wicks below, but once this 7-day candle closed above the 9, we opened up, it wicked down, tested it perfectly to the dollar, launched to the 70K high. We have this first pullback on the 7-day chart. It wicks down to the 33, all right? Bounces up. Where does it reject from? The 9 length variance log moving average. This is not exponential. This is not simple. These are log moving averages. Now we've closed below the 33. That is ugly. So the 54 is down here at 37.3. Oh, another number, 37.3, huh? First standard deviation on the monthly. Wait a minute. It's down there. Give me a second. Third standard deviation on this weekly candle, 37.6. So between the weekly and the monthly and these different time frames, we've got a lot of confluence, anywhere from like 37 to 32 area. If that 40K level breaks, look for those levels. Telling you, gonna happen. We're gonna see it. So Bilbo, why aren't you in a short? Well, I don't jump in the middle of trades. I was gone earlier. I'd have been so on this, but I would already taken profit. Alpha traders don't just sit in positions, right? We don't just sit in positions. We take our profit at deviation levels. We're safe. Profit is profit. I could care less. And so if we were like, so yesterday we come down here, say I take profit at the second standard deviation. I'm out of the trade till the new day. Now I'm waiting to see. I want to see how price action reacts in this daily level, this daily volatility range. Could we bounce up here? Sure, we could, but the 1SD isn't even outside of the new daily volatility range. So I would say if we do go to the top side here for a little bit, 44.5 at the most. We'll probably reject from there. That's just from what I'm seeing on this chart. And then we could possibly start moving down to these lower standard deviation levels on the daily, right? And all that confluence is down there at about 40.5. That's the 2SD on today's current candle, a little bit past the 95.4 Laplace. And if you're watching this on YouTube for the first time, you're going, what in the hell is this guy talking about? I've never heard, what is he even talking about? Use Google. Google standard deviation, right? Normal distribution. Google the percentage levels of the Laplace distribution. Google Z-score. Start Googling these terms you're hearing me talk about. This stuff really isn't that hard. But if you've never heard it and you don't even know what the hell it is, it's not going to come to you very fast. You got to do some studying. But this is what we do here in this Discord. We try to help people understand how to use this stuff because it's very powerful. There's nothing out there like this. That's why we're such a tight group, tight group of people. Jesus, tough. We all help each other understand this. I know it just like flows off my tongue. Like, what the hell's this guy talking about? Man, I've been studying this hardcore every fucking day for like 3 years now. And when I dig into something, look out, man. I mean, I don't let up. Don't let up. And once you understand how to read this chart, I know it does it look nuts? Especially if I right, if I scale this down, people are going to look at this and go, "What the hell does all this even mean?" It means a lot. These are all price action volatility ranges and distribution levels for returns. Okay. Price action does not have a return or does not have standard deviation levels, right? It's the returns. That's all we care about. That's why you hear me time after time after time talking about the divergence between price action and returns. It's the only thing that matters. Hey, there's bare divergence between price action and returns. Hey, you guys in a long, the returns and the price action divergence is telling you the return on your investment is diminishing fast. Take your freaking profit. But no, Bilbo, I'm a dumbass. I'm just going to sit in my trade. I'm emotionally attached to it. We're going to the moon. Wrecked. And the whole way up, they're adding on to their position, getting over leverage. This is just continuing. I was in another Discord. These guys are wrecked. There's so many guys that are wrecked right now. I got liquidated. So a couple guys in Seoul, they got liquidated. I'm like, stop using leverage. Trade spot. Learn how to trade options. Use futures to hedge your options. It's simple, man. It's simple. Do you think these high frequency trading firms and these hedge funds and shit, you think they're out there trading leverage? Hell, most of them are in options. People got to figure this shit out, man. You're going to do nothing but lose money. I ask people all the time, how often do you withdraw money from your exchange? Or are you just that guy that's just continually depositing, depositing, depositing because you're addicted to gambling? That's what leverage trading is. You're addicted to gambling. For Christ's sakes, go to the casino and play blackjack, goofy. I can't stress it enough. You got better odds. Go to the craps table. Go to the poker room. Go get a life. If you want to gamble, go really gamble. Give yourself a chance, man. Don't gamble getting over leveraged in futures in a market where 80 to 90% of the trading, this whole market's being pushed by these algos. What do you think they're using to program their algos with? You're looking at it. Everything I'm showing you, this is what they use. That's why you see massive bounces off these distribution levels. That's where the algos are sitting. They dump the market right to them and woo, rocket ship right out or reject, whichever way they're going. Happens all the time. Happens all the time to people. I don't know, man. Yeah, I get a little heated about it just because it's simple. This is not hard, but people are addicted to this leverage bullshit. You can't. If I'm ever leveraged, it's like 2% maybe. But these guys are 100x, right? 70x. Here's the biggest problem. People will get into a position like on this 7 day right here. Let's pop this up. This all the way down here from under 10K, right? So right here, we start moving on the 7 day. And these idiots, okay, maybe they start out 20x during this candle right here, right? Boom, they add on. Now they're 30x. We get this little pullback, right? And then it bounces. Oh, now I'm 40x. They keep adding on. They keep adding on. By the time this thing's up here where you should be taking profit, they're 50, 60, 70x leverage liquidated. 1 7 day candle. You're liquidated. Add on, add on, add on, liquidated, add on, add on, add on, liquidated. You're in a shit ton of profit, and somehow, some way, you end up losing every dime and getting liquidated on these moves. All you got to do is look at price action. It's the same damn thing over and over and over again. The same people not taking profit, not taking profit, not taking profit. It just blows my mind. Bitcoin will bend you over, and if you're a bull or a bear, choose your color dildo. They're going to shove it right in your butt every time. If you're over leveraged, you're going to get whacked. That's just the name of the game. Why do you think you get into the front door of these exchanges and they're like, hey, here's all this leverage, take it? It's candy. And most people don't even understand what the hell it is. Why the hell you think exchanges are loaning you money to trade? It's like, oh my God. I would think that this would just be like, is this a trap? Yeah, it's a trap. It's like the heroin dealer in the corner. Here, take this dime bag. It's free the first time. Tell all your friends. Then they just start liquidating your ass. God, stop, stop. When you have massive moves like this, you don't need to be leveraged. But hey, we're in that entitlement land, right? In this new age of whatever you want to call it. And people are just like, I want to get rich now. Oh my God. I can put $1,000 in here and use their leverage and I'll get rich quick. And then you have to put another $1,000 in. Oh, I got liquidated. I got to put another $1,000 in. It's an endless cycle of madness. Like I said, go to the casino, play blackjack or something, man. Do yourself a favor. Stop giving money to Bitcoin. Bitcoin loves it. Right? These algos will just chew you up and spit you out. Go to the stream chat. I'm ranting like crazy. In your opinion, what cares? Handle news events, in my opinion. Yeah, man. Yeah, 100%. You nailed it. And to be honest, I'm looking at I'm looking for divergence, and I'm looking what's entropy telling me. What's historical volatility z-score and is volatility expanding? And then I head over onto the VRE in the distribution chart, and I'm there. I'm just going, okay, now it's child's play. Yep, yep. What Donnie said, 100%. Yes, sir. Where's my little boom, boom, boom. There we go. Okay, now let's pop over here on the weekly. Here's the thing though, I'm telling you, man, this is actually this gives me some hope. I would love to see this thing reject from like I said, maybe 44.5, go up there if it even gets there, guys. This thing could reject right here, where I mean, we just rejected off the 68. Go over here real quick. We just rejected to the dollar. Those white crosses right there, that is the daily 68.3% Laplace distribution, right? To the top side. We just ran up, hit it, rejected. Can we push through here? Can it come up and get into this daily range? The problem, like I said, not only do you have this weekly level, the green dot line, what is that? The weekly S1? Yeah, powerful resistance level now. Here's the weekly range for price action, volatility, right? Red dotted line's the top, yellow's the middle, red is the bottom. Where did we reject from? The day before, right off the bottom of the weekly range, and that's what started this. So that weekly range on Bitcoin's been tested. This thing can just run down. So if we get past this 68.3, I'll probably look for a 1 SD pop. But can we get by here? It's right at that weekly S1. This would be a good rejection right here at about 44.5, 45, 44.6 area, and then move to those lower levels. But to get back over here on the weekly, look at the return oscillator. Let me blow this up. Let me turn off this freaking higher 45-minute. There we go. Look at the returns oscillator on the weekly. All right. Now we can see it a little better. We get this down move. Look on the weekly. Low, lower low. We're putting in a lower low right here, right? On the weekly. If this comes down, where is this 54 at? 36.7, 36.8. Actually, it's at 36.737. So that would be a powerful bounce there too. And remember, we've talked about that 37K area. We've already talked about that. That is the 3SD on the weekly. And what else was that? Oh, well, you heard me. It's on tape or on video, whatever the hell. I'm still back in Betamax, fucking VHS land, my old ass. Um, if this returns oscillator bounces off this zero mean, if we come down here and find a bottom on a wick, pull back up, and this returns oscillator bounces on the weekly off the zero mean, we create that bull divergence, man, we could really scream out of this hole. But we got it. I don't think the bottom's in, not even close, especially since I showed earlier how we've cracked those levels on like the 2 day, 3 day, 5 day. This thing's got some downside coming, 100%. And this would be a good spot to bounce on this 54 if we get there. You can see the 33 bounce price action right here to 29K low on the weekly. It bounced it right here when we got down to 44, and then we had that pop back up to what, 52? This week, we close this weekly below here. This could be a slow process. We don't have to go down there right away. But you know how Bitcoin likes to do it. When it starts, man, sometimes it just flushes. So we could go down and get a wick down here, right? Something like this right here. I mean, nothing went all the way down to about like 43.2, and then ended up closing about 5K above. So this would be interesting. Which this thing could go down to 37, 38 and bounce right back up to where we're right at now. It's going to be an interesting weekly close here when we get to see what's going on. But is what I'm really telling you. We want this returns oscillator to stay above the C-rep mean. Do not come back down below. We do not want that. But here, and so all this entire, you can see how the bottom, the entropy, it's not blue like this. See this trend in the entropy? Look at the price action. It was from 10K all the way up to the first 65. That was all trend on the weekly. That is powerful shit right there. Since the top at 65, since that first 65K high, all this price action is random. All of it. All random. We have not seen a weekly trend again yet. The next weekly trend is going to determine whether or not Bitcoin is at fucking $20,000 or $100,000. Mark my words. I'm saying it right now. When you see this trend again, it's going one way and it's going that way hard. And consider it on the weekly, the Shannon entropy starting to expand past the zero threshold, going into negative correlation. The weekly volatility on the 636 is starting to expand, heading into negative correlation. The APPs are both, all three of them are heading down. Oh, shit. Bitcoin needs some good news. That's what I'm saying. Bitcoin needs some real good news. Yasha. Any news? Oh, boy. Time is it? Yeah. Been talking 47 minutes about doomsday. It's not doomsday. It's a volatility trader. We thrive on this shit. This is volatility where you get other people going, be careful. Don't trade right now. The market's very volatile. You don't want to trade. Well, yeah, that's because those goofies are using goofy stuff to trade with. They don't even know about volatility. They don't even know about entropy, and they damn sure don't know where the distribution levels are. This is where all this comes into play. This is what the high frequency trading firms are using to program their algorithms. For God's sakes, why in the world would you not want to be on their page? It's incredible. I'll tell you why. Because people don't give it any credit because nobody talks about this. Why do you think that is? Do you think these high frequency trading firms are out there just with a bullhorn going, "Hey, all you retail traders, you should be using this"? No. They're part of this scam. They're promoting traditional technical analysis. That's what they do, while they're using exactly the opposite. People call me crazy. It's like, no, you're the one that's crazy. One day you'll figure it out that everything Alpha Trading's been talking about is 100% factual. There's people out there that get it. People out there, like there's another guy on a YouTube channel, Coding Jesus. I haven't heard a lot out of him lately. But he's a literally a quant developer, right? So he's busy as shit to begin with. But he just nonstop dogging traditional TA, trying to tell people the same shit, right? Nobody listens. Nobody listens. They would rather draw on their chart, draw ascending and descending triangles and all kinds of weird ass shit. Chart art, man. Chart art. It's like, look, I don't have enough crayons to explain this to you. That's all I got to say about that. Right? I do not have enough crayons to draw a picture to explain this to you. That's what I think about traditional TA. It's chart art for kids, man. All right. The last the last bit here. Yeah, you can see, right? Yesterday's daily candle. What did we hit to the dollar? Second standard deviation. We blew right through the first standard deviation. These are the deviation bands. Went right to it. Boom, boom. Very interesting. Because yeah, I'm pretty sure it was right at like 42.4. We were in price action went to like 42.420. Imagine that. You think these algos are out smoking weed and shit. I don't get it. Pretty funny. So now, first standard deviation on today's daily on the bands, 42.3. Second 39. Third, a tick below 36. Interesting. Are we going to hit another 2SD today? Are we going to get this pushed down under 40K like I was talking about? Get a wick below 40K, pull back up, start it back up to the upside, close the weekly, bounce that weekly returns oscillator off the zero mean, and get the hell out of Dodge and continue on. And it's just like people haven't figured out what the real sound money is, and they're not gonna. It's gonna take a while, right? It's gonna take a while, but one day we'll get there. See what's happening on the weekly. What do we got? These bottom bands to a little bit under 40K is what we. But here's the thing, right? When we're getting a big sell off like this, I wouldn't be a bit surprised. Here's this. Here we're down there at 30K. The reverse Fisher, on the weekly. Right now, when we get the next weekly close, it's going to be at about 33.3. If it takes its time, the next week after that, it's probably going to be about 32.2. But the bottom side of the band here, these are all power means, is about $1,000 below 40K. So do we wick down here this week, right? Do we wick down here and test that, the bottom of those, and wick and bounce up from there? I can tell you one thing for sure. We're about to find out. 100%. We are about to find out. Yep. 36737. I could see that being the wick, maybe. If we start pushing towards 40K, get a little bit of liquidation cascade, freaking shoot down to that little under 37. You think that's going to scare the shit out of some people? There's too many people sitting in longs, man. We were talking about this a couple weeks ago. Like, yeah, this is not good. This is not good at all. This market needs reset. You can't go from $3,800 to $70,000 without some massive shit happening in this market. People are taking profits, while a lot of retail traders are just continually putting money back into the market. These big players are making in hundreds of millions of dollars. So yeah, go figure. You want to jump on those coattails. Those are the coattails you want to jump on. And I like seeing this too. That first standard deviation on price action, 39,762. And I'm always going to go right back to here. We are in the 68.3 Laplace distribution range on the weekly from the projection from the 41K low. That's where we're at right now. So let me do something real quick. Let's throw this distribution on the 29K low real quick. I haven't checked that in a while. Uh-oh. So from the 29K low, Bitcoin's dipping into that 68.3% range. All right. So is what we really want to see here. We want to see a bounce off of this bottom side of the 41K low, 68.3 projection, 100%. We do not want this thing getting trapped down in this, because the bottom of that 68.3 is under 30K. The mean 32, 32.5. Because for like about 5 weeks, we were just ranging in between the mean of that projection and the top side of the 68.3. I mean, what's this thing? We're going to get down here, test this mean, and start ranging in here. I mean, God knows what Bitcoin's going to be up to, but I'm telling you right now, I mean, Bitcoin's stuck down here. This thing's not coming out anytime soon. Anytime soon. Michael Saylor's about to spend all his money. I don't know if he can afford any more Bitcoin. But those guys, they don't give a shit what the price is. They're not following the price. They're just continually buying Bitcoin, right? Because everybody knows at some point where the hell this thing's going to be. They are trying to shake people out of positions right now. Bitcoin is going to be worth a lot of money one of these days. Within this next decade, hell, maybe within the next 5 years, you're going to see $1 million Bitcoin, right? You're going to see $1 million Bitcoin, definitely within the next decade. So these guys are playing the long game, right? They are playing the long game. So anyway, let me pop on something else here real quick. BTC. Let me drop this down to a daily. On my DeFi watch list. Where you at, Matic? Yeah, Matic on the yesterday daily, it wicked down through the 54. And this is what I'm kind of looking for. I'm looking for Matic. If Bitcoin dumps, you're going to see Matic come down here sometime on this daily chart and probably test this 144, and it's back down about $1.80. God's sakes, that could be a long in the century right there. No leverage. Crying out loud. This isn't about getting rich quick. This is about your P&L. This is about winning trades and taking profits. We are significantly positively correlated on the daily Shannon entropy percentile, and it is pretty much fully contracted. So this is when this does expand, is it going to head in a negative correlation or is it going to stay positively correlated? That's what you're probably going to see on this daily, especially Bitcoin just going to go down there and test that and bounce out of the hole at like that 68.3 on the weekly around 40. You'll probably see this go negatively correlated on the daily for Matic and the Shannon entropy percentile expand. And then when Bitcoin makes its move, the correlation will probably switch back up positive and Matic will pop out of that hole. Is there any div? Yeah, I mean, Matic, and that's a thing, even on the daily, Matic's building some bull div. Is that freaking on Bitcoin too? I'm pretty sure it was. Hold on. Yeah, Matic and Bitcoin, guarantee they're highly correlated. If I pull up a correlation chart right now, they're going to be highly correlated assets. I mean, damn, the charts look identical on the daily, right? Bull div building, But how much pop are we going to get here? Is this daily return oscillator going to reject off the zero mean here for more downside action? Very possibly could, but as well, the yeah, I just continue to go down here. This is becoming one of my favorite indicators, the Shannon entropy percentile, and it's expanding, heading into negative correlation. Does it look like that on the daily Formatic? I bet it does. Oh no, hell, we just talked about it. What am I talking about? No, but I'm looking for if this expands, it's probably going to go negatively correlated, just like Bitcoin's is. But we do have some bull div on the daily. But considering the sell pressure going on right now, speaking of sell pressure, here, you want me to scare the shit out of you real quick? Hold on here. You load up a chart. Let's check out some buy and sell pressure right here. And look that it's all sell pressure. 4 hour. The daily. Oof. Now, what did I just say you were going to see? There's no sell pressure. But when you see that, or there's no buy pressure, pardon me. There's no buy pressure at all. It's literally at a 1, right? The sell pressure's at an 86. But when you see there's like not even a battle going on right now, all sell pressure, what is that creating? Go back to Bitcoin. There you go. That's a daily. What's that creating? It's creating bull div. Now, why do I say that? Because, whoops, where the hell are you? Okay. Where the hell that pot? There it is. When you don't have any buy pressure and all you have is sell pressure, the bears, right? They're blowing their load right now. They're literally blowing their load with no resistance at all. So here they're storing their energy for a bounce. And that's what we're seeing. When you see that, you're going to see bull div on the daily. And that's exactly what we're seeing build. And I've been showing this. I showed this before on the weekly. This buy pressure has been decreasing, been decreasing, and now this week right now, the sell pressure is building up again. And I mean, that's not. What's that look like on the weekly? Put this on index. Go to the weekly. So I cannot remember. Yeah, I'm telling you, man. I was just talking about that building that bull did, but it's got to bounce on the zero mean. And if that does happen, you can see, I mean, 88, sell pressure's at an 88, the buy pressure's at an 18. That's what, if you see a bounce on that zero mean, you're going to see this flip flop one of these weeks, and you're going to see a shit ton of buy pressure come in and the sell pressure just drop off a cliff. Beautiful. It's kind of what I wanted to see. This is kind of like, okay, I do think Bitcoin's going to flush out, but I truly think we might get a wick below 40, but I hope so. Bad word to use, but I'm kind of on the side that that's where Bitcoin's going to bounce from what I'm seeing from that buy and sell pressure, because there's a big disparity there. But the bulls are just like, oh, have your way. Come on, come on down. You lead the dance. We're tired. We just went up to 70K. You party for a while. Yeah, that's about it. What time is it? Oh, yeah, we got to get off here. All right. So, if you're watching this on YouTube for the first time, we are Alpha Trading. We trade volatility, probability, and statistics, and we love to teach people to do the same. The link to our Discord is in the description of all our videos. Come on in, open up a support ticket, tell us what's on your mind. Take a look in the shop channel. We have two different levels of the Discord that will give you two different accesses to the alpha trading system. It's pretty simple, pretty cut and dry. Don't just come in and sit like a bump in a log in the public chat where everybody, the people that are there, they're not. Trust me, there is a massive server you have to get entry into. There's well, I don't know how many channels. It's way too many probably, but they're there. There's a ton of information about volatility, probability, and statistics. A nice little small group of people all learning about volatility trading. It's a great community, so check it out. And I want to thank everybody watching live in the Discord as usual. You guys are great. Appreciate the support. And wherever you're at in this crazy world that we're experiencing right now, have a wonderful rest of your morning, afternoon, or evening. We'll see you tomorrow, 2 p.m. Pacific Standard Time. See you guys.